Namaste and good morning. Welcome to the Sola Aane Daily Brief, your daily dose of business news that matters. I'm your host, and today is Friday, March 27th, 2026. Buckle up, it's been a rough day on Dalal Street. Let's dive in. First up, your top headlines. Headline 1: Black Friday for the markets. Sensex crashes over 1,600 points. Nifty breaks below 23,000 as Middle East tensions send investors running for cover. Headline 2: Goldman Sachs cuts India's 2026 GDP growth forecast to just 5.9%, citing what they call the largest energy supply disruption since the 1970s. Headline 3: A parliamentary panel reveals that 6 out of 8 MSME budget promises from last year are still just on paper, including the much-awaited micro-enterprise credit cards. Now let's take a deeper look. Our first deep dive is on today's market bloodbath. The Sensex fell 1,690 points, or 2.25%, to close at 73,583. The Nifty dropped 487 points to settle at 22,820. That's roughly 5 lakh crore rupees of investor wealth. Poof, gone in a single session. What triggered this? 2 words: Iran tensions. Mixed signals from US-Iran negotiations over the weekend spooked markets globally. With the Strait of Hormuz still effectively blocked, Brent crude is hovering around $105 to $115 a barrel. India imports 85% of its crude oil, and every $10 rise in Brent costs us roughly 0.5% of GDP. The rupee slid past 92 to the dollar, a new all-time low. Foreign institutional investors have now pulled out over 60,000 crore rupees in March alone. PSU bank stocks, auto, and real estate were the worst hit. IT held up relatively better. Now, if you're an MSME owner watching this, here's what matters to you. Rising oil prices mean your transportation and raw material costs are going up. If you are importing anything, whether it's electronic components, chemicals, or packaging materials, the weak rupee just made everything more expensive. My advice? Lock in your input costs wherever you can. Talk to your suppliers about fixed price contracts for the next quarter. And if you have dollar-denominated costs, consider some basic hedging. Our second deep dive: MSME promises versus reality. A parliamentary standing committee dropped a bombshell this month. Of the 8 major MSME announcements in the 2025-26 budget, only 2 have actually been implemented. The 2 that work? The MSME classification revision, so more businesses now qualify as MSMEs. And the credit guarantee ceiling going up from 5 crore to 10 crore. Good progress there. But the 6 still stuck. The micro-enterprise credit cards with 5 lakh limits that were supposed to help 10 lakh businesses annually. Still in draft stage. Term loans up to 2 crore for first-time women and SC/ST entrepreneurs. The proposal is quote-unquote under examination. India Post was supposed to deliver logistics and credit services to rural artisans. Still evolving. On the positive side, the government did amend the Mutual Credit Guarantee Scheme this week to include service sector MSMEs and reduce the minimum machinery investment requirement to 60%. So, if you run a service-based MSME and need credit support for expansion, this is worth looking into. The committee's words were sharp. They said there's a, quote, serious disconnect between policy intent and last-mile delivery. If you were counting on any of those 6 schemes for your business plan this year, don't hold your breath. Plan with what's available today. Moving on, let's talk about some brighter corporate news. Infosys just announced its second-largest acquisition ever, buying US-based Optimum Healthcare IT for $465 million. They're also picking up another firm called Stratus for $95 million. That's over $560 million in 1 week, all focused on healthcare and AI. Why should you care? Because this signals where the big money sees growth: healthcare technology, AI-driven services, and managed IT for hospitals. If you're in the healthcare supply chain or health tech space, the ecosystem around you is about to get a lot more competitive and a lot more funded. And one more story worth watching: Flipkart has completed its redomiciliation from Singapore back to India. They're now officially an Indian company again, clearing the path for what could be the biggest IPO India has ever seen, targeted before March 2027. So what does all this mean if you're running a business in India today? First, brace for higher costs. Oil above $100 and the rupee past 92 means inflation pressure on everything from transport to raw materials. Review your pricing now, not next month. Second, don't count on government schemes you've only heard announced. Until the money is actually flowing, build your plans around existing support like the revised CGTMSE limits and the new MCGS amendments for service MSMEs. Third, if you're in healthcare, edtech, or any AI-adjacent services, the Infosys acquisition signals a massive wave of investment coming into Indian healthcare IT. Position yourself to be part of that supply chain. And fourth, watch your cash flow like a hawk. With FIIs pulling out and credit conditions potentially tightening if RBI hikes rates, liquidity could get tighter in the coming months. Goldman is now expecting a 50 basis point rate hike. That means your borrowing costs could go up. That's your 16AN daily brief for today. If you're thinking about buying or selling a business, head over to solaane.com. That's 1 to 6ane.com, where we make business deals sola aane pakka. Have a safe weekend and see you on Monday.